We were 23 minutes past the hour. We've got major data coming out of the United States in about 5-10 minutes or so. Actually, at the bottom of the hour. So let's just get the let's put that on. Let's minimize me. There we go. Why can't I share? Why is my screen not sharing? I can't see that. I want to share this. Oh dear, never mind. We'll bring the charts back up in a minute. So we've got weekly claims in 7 or 8 minutes. We've got GDP, and we've also got PCE later on today as well. And it's a major day for the data. Remember, markets were hanging on what Mr. Powell had to say day before yesterday, and again yesterday, the second testimony to the Senate. And basically, it's reiterating what they've been saying for a while now. The Fed are very much staying with the accommodative stance. They're, lower for longer as far as interest rates are concerned. And interestingly, though, yesterday he did sort of question the size of the fiscal package. But paradoxically, he's been calling for government intervention for a while. But the 1.9 trillion is sort of causing him some sort of questions or some sort of concerns, but very much reflation trader on. We've got a rise in commodity currencies. We've got a massive rise in commodities. Copper, as an example, is at a 10-year high today. The commodity currencies, the Kiwi, the Aussie, and the Canadian dollar, both all very strong and have been for a while. Dollar itself, US dollar, under pressure. Let's just see the chat window here, and where are we? Oh, here, and sterling's very high as well, 3-month high as well. So lots going on at the moment. So let's just bring up the charts. For some reason, my picture goes. If we bring up the charts, I'm going to share that picture of me in there as well. Anyway, this is the euro. I haven't got my ugly mug on there. So any questions, guys, stick them in the box. I'm going to go through the main charts at the moment before the data comes out. So we'll just have a quick scan of those. So euros up here over that key 122 level. The key for me was yesterday when we broke through this 126, sorry, not 126, 121.65 area. Mohammed, good afternoon to you, sir. It's the Facebook comments I can't see. I knew there was something missing. I can't see the comments on here. Okay, there's nobody in at the moment, so let's have a good no comments so far. So euro over 122. We've got this weaker dollar story continuing over R2 for today. That's that little red line here. I hope you can see that up here. And the bid continues. Strong day today. Sideways yesterday and Tuesday, but over this 121.65. I've got the daily time frame. See why that was a key level. You can see these days here: 1, 2, 3, 4, 5 days here. We couldn't break that 121.65. We fell down under 120. Then we've moved up, dipped down, and then this rally here. So we got 1, 2, 3, 4, 5, 6 consecutive, or certainly 6 into our 6th day up. Big strong candle so far today. Weekday on day 4, we closed below that pink line there, which is the 50-day moving average, but still a very strong over the 20-day moving average, which is here under 121. So strong week so far for euro against the dollar, and at 122.40 we trade currently. Dollar is up against the weaker safe haven currency, so the yen and the Swiss franc both remain quite weak. Excuse me, just a quick drink. So far, why can't I share that? Anyway, my pictures disappeared for some reason. Hopefully you can still hear me. Actually, let's hope you can still hear me. I'm assuming you can still hear me. Why isn't that? Sharing properly. Hopefully you can still hear me. Mohammed, can you still hear me? Anybody on Facebook here? Let's have a look. Let's look at the comments in here. Hello. This is Lucinda. This is the euro. Sorry, this is euro yen now. We were looking at euro dollar. I don't know how long you've been in here, but I'm just seeing your question now. This is euro yen over the key 106. So we've got a weak yen and a weak Swiss franc, but everything else is up against the dollar. And the data is imminent in the next couple of minutes. So remember, we've got GDP. Lucine can hear me. Good. Okay, so this is dollar yen you're looking at the moment. So Mohammed, good afternoon to you, sir. Anything you want to have a look at, let me know, and we'll get through when we've been through these main charts, and we've had a look at the data as it's come out. So I still can't figure out why that's not sharing picture in picture. There we are. You can have me. You can have my whole ugly mug, or oh, there we are. There we are. Me down in the bottom corner, but it's hiding the MACD and the stochastics just above my head. So this is dollar against the yen. It's up. It's over the key 106 area. So that's up on this 1 hour chart. Sterling, you see, remains very strong. This is the 142. These two lines up here, that thick one there is 141.90, the high that we got to earlier in the week. But we're over 142 on the spike yesterday. Then we moved down into 141. So a big 100 pip sell off yesterday. And now we're bouncing up. We tried 142 again today, and we've come back down thus far, and we're just dipped under that 20-hour moving average. But sterling remains relatively well bid. Aussie and the Kiwi are both very strong. 79.80 here for the Aussie. The Kiwi, one of the better performance over for a while. And here we are. We're over 70. Here we are. This is 72 all the way down here from earlier in the week, and we've just rallied 72, 73, 74, and here we are at 74.44. So Kiwi very much in bid. Again, you can't see the top of the MACD because it's behind my picture here, but it's very strong. It's up and it's bid. Stochastics is dropping a tad now, and the RSI has just come out of the overbought area at 59, but it's still very elevated. That's the red line up here, guys. So Kiwi bid. Dollar CAD was under 125, a big 3-year low. April 2018, we were last down here, 124.87 at the moment, right into S1 today. So CAD getting a lift from a big rally in the oil stocks. The oil market rebounded very aggressively yesterday from the sell-off we had the day before. Sorry, I'm just checking Facebook, some questions. Everybody can see me. Emilio's asking about pound against euro pound. So I'm going to have to make a note of these. I can't share your Facebook comments, guys, so it's just the YouTube one for some reason. Emilio, euro pound, we'll come to that in a minute. Why do you give analysis on demo account? This is just my demo account here, Thibaut. It doesn't really make much of a difference, my friend. But there we are. That's a demo account. Well spotted. We can use live accounts if you prefer. It's not a problem. Euro pound 4 hours. So let's have a look for Emilio. So down we go. I'll wait, Emilio, if you don't mind, until the data's come out. So let me just check. We're just a couple of minutes past the data's to come. There's no instant. Let's go back to the euro. It's the daily. Let's have a look at the 15-minute chart, see how it's reacted. Not much of a reaction so far in the euro against the dollar data. So let's just quick run through the data. It's not showing up on here. Let's have a look. So continuing claims, initial claims were much better than expected for the first time in a number of weeks. It came in at 730,000. We were expected around 840,000, so they've come in much better than expected, nearly a big 100,000 better than expected for the week. Still very elevated at 730,000. We're sort of back to where we were about a month ago, but that's much better news for unemployed people in the United States. Continuing claims have also fallen 4.4 million from the 4.46 million. So, and 4.5 million last week. So again, that's improved, better than expected number. That's brought the 4-week average down to about 807,000 from 830,000. So again, that's quite good news. GDP final reading of, I'll call it preliminary, it's the second reading, is in line with expectations of 4.1% for the final quarter of 2020, so 4.1% for that final quarter. Obviously, we had the big fall in quarter two, big, huge 30% plus bounce back in quarter three, 33%, I think it was finally, wasn't it? So 4.1% for quarter four is the headline number. PCE is more or less in line, but more biased to the upside. Durable goods was a big beat as well. Durable goods, the headline, come in at 3.4% as opposed to 1.1%. Taking out the transportation factor for January, it's come in double expectations as well at 1.4% compared to 0.7%. So this US data is actually much better than perhaps much better is a bit of an exaggeration. It's better than expected. Let's put it like that. Certainly, the initial claims is a very good number, 100,000 better than expected. Quite a significant bounce back. So we'll see how that plays out in next week's NFP number as well. Obviously, in the ADP number on Wednesday next week as well as we move into the new month. Yeah, durable goods good. PC is pretty in line with expectations, and claims for the week pretty good as well on the upside. So that's generally positive for the US economy. Whether it'll make a difference from anything that Chair Powell has said over the last 2 days, I would question. Euro here hasn't moved us at all here particularly. So we're sort of hardly moved at all really on that combined data at 122, so it's remained up. So we'll go at sterling, it's down, sterling's down a bit, but really not much of a move. Has it helped the dollar yen trade? Yeah, it's ticked up here, so 106.16. Next resistance for the yen is that 106.24.6 R1 today. So let's get into your requests. So let's have a look. Sean's asked about gold. We'll come to gold in a minute. Dr. Sam, good afternoon to you, sir. Give us a prediction for the next 2 weeks. I'll come to that in a minute, Mohammed. Okay. Let's have a look. Euro pound 4 hour, it says Emilio. Let's have a look for Emilio. So euro pound's been very much to the downside with this strong. Where's my euro pound gone? Where's euro pound gone down here? I've lost it. Oh, that's why I was in the wrong part of my charts. Just bear with me a second. It'll be easier. Won't it? Where's my euro? Where's euro? I've lost my euro. There it is. I knew it was here somewhere. So 4 hour chart. Yeah, bounced back a bit today. Bounced back quite significantly today. So the 4 hour here, as Milo has asked for on the euro against sterling. Relatively big bounce back. So that had been trailing, presumably Milo, you've been trading this on the 4 hour. So that would have went short here earlier in the week on the 12th around 87.56, and that's just continued to decline. You've been in and out of that, but the trend remained very much under that 20-hour moving average, under the yellow line, which is the yellow line, the 9-period moving average. We spiked down yesterday to 85.37, then we've turned around and it's just closed out for the final time and turned long here this morning or today at 12 o'clock, and it's following through now. This current candle has still 25 minutes to conclude, but that's a big tick back up. So that would have gone long here from the short up here. So close your short position out all the way down here at 86.20 basically. So a big old move of how many pips you had out of that? That was a massive move. 130 pips on that easily all the way down, and now that's turned long here on that 4 hour crossing EMA strategy here. So first time was that see how the moving average, they're not the moving average, the Bollinger Bands have nipped in here, squeezed in as we've been going down. So there was a final leg down. Something was happening here at that squeeze point. The first initial was that big candle there. So you stayed short and then it went gapped down into the floor. And it's bounced from that today, this morning. So a nice trending move for a day and a half, best part of 2 days. Short in euro, pound there, Emilio. I hope you got moved most of that move. Sean's asking about gold socks. I'm sure that's your real name, my friend. Oh, my charts are all messed up here. I don't know why that is. They're all in a mess. Gold remains pressured. Let's have a look. Gold is what's gold? Gold. Euro. That's the daily, so it's a bit of a mess here on the 1 hour chart, but you can see here we've tried to hang to cover 1800 yesterday. We dipped down, we're below yesterday's low, which is a relative negative move, but we've been down all day, Sean, my friend, continuing to move down. We've moved under S1 today. S2 on the daily, or the S2 for the daily time frame is 1770, so another big round number. That's a significant number on the daily time frame. We'll come to that in a minute. So key level there, 1770. We're currently at 1781.75 and continuing to track lower. So it's another one. Moved down aggressively yesterday, bounced back up, but couldn't really hold over the 20-hour moving average there. So we went over it for one candle, ran out of puff. The 50-hour kept you on the short side, and then it went short again here first thing this morning, and it's been trending lower ever since. Bit of a retrace back to the pivot point earlier this morning before the London Open at 1800, but again couldn't hold that big psychological 1800, and since 9 o'clock server time we've been trending lower ever since. So yeah, that move continues to track lower. So let me just have a quick check. So Sean, I don't know what time frame you're trading that on, my friend, but certainly the 1 hour's down. The 4 hour will be negative, and you saw the daily was as well. This is the 4 hour, some big candles here. That was yesterday, wasn't it? That big 4 hour candle there yesterday afternoon, tracking lower. You know, again, the lows, the highs getting lower, the lows getting lower here on the 4 hour from this move up at the end of a week or so ago. So again, that current candle is obviously still forming, doesn't complete for an hour and a bit, but it's still a big one. It's weaker. It's currently under the low of the day as well, so obviously can't decide what to do because it's still forming, but we've been heading lower in the 1 hour time frame. The MACD's weak. It's sort of turned lower again here on the 4 hour time frame. Stochastics are down, RSI is down, so 4 hours down, 1 hour's down. Daily chopping about, but again you can see the highs dish are lower. The lows are also getting lower. So our current new low, or latest low, is that 1770 we mentioned earlier, the S2 of the day. So that's a key level, 1770 for the gold to move perhaps down to, or perhaps find some support. On the daily time frame, the 20-day moving average and the 200-day moving average are all now coalescing around this 1815, 1820 zone, but moving lower. So that's a key $5 gap on the daily time frame, 1815 to 1820 to move above that. But as you can see, we're a long way below that at the moment at 1783. So the pressure remains to the downside. Who is next? I'm going to talk. Hello, my friend. Anything you want to talk about? Let me know. Good afternoon to you. I don't know where you are, Nidu. Good evening to Indonesia. Who's next? It's been a long time because yeah. Sorry, I don't recognise your name. I'm sure it has, but welcome back and welcome to YouTube. Let me check my Facebook comments. Why can't you guys verify my account since over 5? Anello, I can't see your name there. Where are you? Says you're in Nigeria. Speak to either our Nigerian Education Centre. Whereabouts are you in Nigeria? It says here you're in Imo State. There must be something outstanding if your account hasn't been verified. Have you made sure you've got the right documents, the correct documents? Come onto the website, Anello, and ask the chat. The chat box will pop up. So speak to the support guys straight away on hotforex.com, and they'll be able to give you an answer what's going on. And there may be something outstanding, but 5 days is obviously far too long to get your account verified. So there's obviously an issue. Perhaps you've missed an email. Check your spam box and your emails. There might be something in there that you've missed. Okay. Any other questions? Obviously come back here and we'll see what we can do for you. Paragon is saying, should we go long gold? Paragon, I can't, Pro Dragon, I can't tell you what to do. But depending I don't know what time frame you're trading, but as you can see, as a trend following trader on this is the daily time frame on the gold, you can see that the highs as you can see, are getting lower, aren't they? You know, anybody can see that, surely. The lows are also getting lower. So what does that tell you? That tells you that the trend is still going down, isn't it? We haven't, as I've just said, for me, the 20-day moving average is key, and it sits at 18.15. We couldn't retrade at 17.81. We're a long way from perhaps moving, any suggestion of moving up technically. As I said, the S2 level, that 1770 area, is much closer to where we are now than breaking higher. So again, depending on your time frame, it's up to you. I mean, there may be a bit of a bounce today, but the 1 hour's down, the 4 hours down, the daily's down, even, I don't know, 15-minute. Again, this is a 15-minute chart on gold, and again, that's following the same pattern, isn't it? The highs are getting lower, the lows are getting lower. I mean, it might not go on forever, but certainly the last hour or so, it's been a strong move down, hasn't it, on that 15-minute time frame. Next question is cable. Time frame, my friend. Certainly it's very strong on the daily time frame. Oops, there we go. That's not a chart I often use, but this is the Heikin-Ashi candles on the daily time frame. But as you can see, that's a very strong move. That's a very positive Heikin-Ashi candle on the daily time frame. White candles, no wicks to the south. That's suggesting strength. Remember, with Heikin-Ashi, it's all about the average. It's the weighted bar. It's not like a normal candlestick, but that's a very, as an indicator, you know, it's been strong, dipped a bit, went from white to red, so you might have got out, but then it went white again. There was a wick to the south, which is, you know, a bit questionable, but it was white. But certainly the next candle was very, very positive, and that's been very positive for 1, 2, 3, 4. Massive positive day yesterday. Huge candle. Look at the size of the body of the candle. Wick's a bit tall, so you'd question that, you know, have we topped out at that 142, 142 plus area? We had a bit of a shock at 140, but the trend is very much to the upside on that particular candle. If we go back to a normal candlestick chart for the cable, and we look down at some of the tighter time frames, let me just get this chart, this screen sorted out. Right, there we are. Let's bring up sterling. So sterling in this, with this crossing moving average, it ran out of steam a bit at 142 here yesterday. Dipped down, but didn't break 141. So we're up again. So we're channeling yesterday and today between 141 and 142. Big 100 pip range. I guess the lower time frames will be a bit weaker now. The 1 hour's dipped and then it's turned up. 30-minute is still sort of still edging lower, sort of consolidating up here. 15-minute again, that dipped down, it's rallied up, and again sort of consolidating through that 141.75 on a 15-minute time frame, but support by the 200 moving average here on the 15-minute, which sits around, what's that? That's for 50. I don't know what time frame you're trading in Kuzu, but yeah, 141.32 is our low. But again, you see the candles at the bottom of the candles are rising, so it's okay, but it's capped at the daily pivot point at 141.53. So sellers are coming in here on the 15-minute time frame. Zoom that up and moving down. So there we've got a resistance there, 141.53. We've got support the 200 hour, and that's been going on for an hour or so now on the 15-minute chart for sterling. But overall, on the higher time frames, 1 hour still looks relatively robust. Although we tried to have a shakeout a couple of hours ago, hasn't happened really. We're sort of turning around, bit of non-directional now around that pivot point. The 4 hour remains robust and over its 20 period moving average, which sits at 141.03. So 141 is a big support in the 4 hour, and the daily time frame. The daily time frame, as we saw with that Heikin-Ashi chart, remains robust and to the upside. So sterling continuing to hang on. Chad, what's Chad saying here? Can I join your group for signals? Chad, come onto the website if you're interested in signals. The auto chartist package is perhaps for you. Let me just say this, okay? Following signals, I would argue, as a trader, limits your education. What do you learn from following somebody's signals? What do you learn when the signal stops, or when they go out of business, or you haven't really learned much as a trader and understanding yourself as a trader, or as a following either price action or trade patterns, or market analysis, technical or fundamental, sentimental analysis. It's a bit of a it's a bit of an easy way out. It's a bit of a crutch, and I understand it. Lots of people do it, and it's big business as well. Remember, but there are systems. There are auto charters are very good. They produce. They scan the market really, really quickly. You've got lots of assets you can check. There's lots of time frames you can check, and lots of different patterns that they create, and quite relatively successful with them as regard to targets and stop loss and all that sort of stuff. So have a look at the auto charts package, Chad, if that's what your way is. Don't mind paying. Well, it's downloading. You've got an account, got some money in your account. It's a free service, and you learn more from doing it yourself. As any good, speak to any good teacher, and you learn by doing, don't we? That's what teachers tell us, don't they, at school and everywhere for learning anything new. It's all about doing it for yourself. So learn to do it for yourself is my argument. But yeah, I understand the idea about signals. Big business, lots of people interested in them. Right, I've got some more. Anil, please let me know how you get on with your account verification with the on the support site. Rio, euro, dollar. We looked at euro, dollar a minute ago, my friend, but we'll certainly have a look at it. Peter's asking for Aussie yen. Aussie yen was the biggest mover this morning, Peter, on the back of this risk-on mood in the market. Remember, we've got Mr. Powell, as we said earlier, just adding to the bid down on dollar, basically. So we've got this weaker dollar, and certainly if we look at the dollar index, it's continued to weaken. But gold, we've just done Aussie and euro. So let's just go back to euro for sorry, I've forgotten your name already because I haven't got the chart up here. Rose asking about the euro. So let's have a look. For the euro here, this is the 15-minute chart. I don't know what time frame you're trading, Ro, my friend, but it's relatively, again, well bid, as you see here. The dotted line here, the red dotted line, is today's R2 level. So we're already, this is the pivot point today. That's R1, that's R2. We're already over R2, so it's very elevated at 122.26. We're over 122. That's the 15-minute chart. Looks like it's running out of steam a wee bit. We've got two fractal highs posted there at 122.38, so call it 122.40 or through there. So the 15-minute chart hasn't moved over 122.35, and that's just triggered a very weak short position there. That might have already stopped you out if you got your stop too close there on that 15-minute chart, but it's still big. We've got support euro here at 122.15, so that's today's support. It's R3. We may come down back to test that. But obviously below that is the big psychological 122. So euro dollar remains bid. That's the 15-minute. 30-minute is still long, but again running out of steam there. Fractal highs, that 122.40 through there. You can see that's bounced off. We've got some ping bars there, so that's looking to perhaps move down. But the 20-period moving average on the 30-minute chart remains all the way down there, just over 122 at 122.04. So that may roll over there, but at the moment it's still holding up. May just some consolidate there before it moves up. The 1 hour chart will still remain long. We've got one fractal high pushed in there at that 122.40 area, or 122.38, and that looks like it's rolling over. But again, the moving average is still aligned. We've got the 5, the 9, and the 20 nicely aligned. It's a bit steep of a move, but they're still, and the gaps between them is a bit wide now. That 20 to 9 is a big gap. But until we close under the 9 period, with this strategy, you're still long, and the 5 is providing support. So the 1 hour traders are still long euro dollar on a trend following basis. Certainly a big move. Now, if we go up to the daily time frame, you can see it's had a strong, as we said earlier, row. Some up there, these are the daily candles. So from this low here under 120.57, the big day for me was yesterday when we broke through this resistance here at 121.65. We closed well right on it here with this candle, but it was all, we actually went over it for quite a bit of the day, and we closed over it. So strong day. You can see these white candles, these positive up candles, 1, 2, 3, 4, 5, 6 days. Last 6 days we've been up 5, 1 day down, and a strong 6 days so far over 122, and we're at this high, which takes us all the way back to the 8th of January. So euro dollar on the up on these higher time frames. Okay, next one was euro yen for Peter. There's my euro yen. It's here somewhere. We looked at this morning. Again, it's just continued to move to the upside, Peter. Really, I would talk about this morning. This is the 1 hour time frame. See how we've consolidated, classic sort of trend analysis there for 2 days. Leg up, sideways. Longer we go sideways, remember the breakout can be quite significant. The breakout was really finding support and breaking out at this says 83.25 from this morning. It's really about 83.30 was the breakout area. So you have that channel there, and then we broke out, and that's just continued to run, and we're still long, all the way to R2, which we were already this morning when we first talked about this. We was up quite a nice percentage move this morning. We didn't quite get to 85 itself, 85.00. Pivot fractal highs being posted there around just shy of that, 84.95. Rolling over a tad, but still holding the gain. So we're still over that 9 period, and this trend following strategy, you're still long. You know, you've come within a whisker of closing out, but it's still long. May close under this current hour. Where are we? We're still, well, 5 minutes. It still looks like we're going to stay above our 9 period moving average. Moving averages are flattened out. See how the 5 has flattened out there at the top at this R1. So R1 is obviously our key resistance today. Our high is 84.95. R1's 84.77. And currently the 9 period EMA for me sits at 88.66, which will close, a break under that on the candle will close us out of this long position we've been in for a while here on that 1 hour time frame. I don't know what time frame, Peter, it is your trade. Let me just go back to Facebook because I've got the Facebook here. But anyway, that's the 1 hour, Peter. The 4 hour for Aussie. Yeah, let's go up the time frames for you. 4 hour again, you know, nice consolidation around that 83.30 resistance. Couldn't break it, and then bang. You know, size matters with candles, as I say all the time. There's lots of people say all the time, not just me, but you know, it can move quite aggressively, this pair. Remember, the Aussie yen is a classic pair for measuring risk in the market. Aussie is a very risk sensitive, being a commodity currency. The yen is the big safe haven currency. So risky currency, Aussie, or risk sensitive currency, the Aussie. Safe haven currency, yen. So this is a clear indication of risk coming back into the market. We've got risk on, Aussie yen up, and we're testing 85. So the 4 hour trade is still long. Daily trade is certainly still long. This is the day trade, and again, using this strategy, you know, it went a lot sideways for most of January. Looks like some edge, and we had that big breakout, the 5th of February, and you've remained long ever since. Thank you very much, and off we run. So with that one, broke at 87, about 81, wasn't it? Something 80, yeah, 80, 83, and here we are at 85, hundreds and hundreds of pips to the upside for the Aussie yen on the daily time frame. Matt D, nice and strong. Our histogram a bit extended over the signal line. The fast moving stochastics here, 733 on this particular chart. You know, it's been overbought, or in the overbought zone, as we say as a stochastic analyst, over 80 since it broke out. But so what? The trend has sort of dealt the oscillator a whack, and we're still in that overbought zone. So we want to see a significant move down before this is running out of steam. RSI similarly also. RSI 14 here, 83. It's getting high. Obviously, it's getting stretched close to 84 for RSI, but the trend remains still to the upside. Moving averages nicely aligned, not too overstretched here on the daily. Nice chart, nice angle, and away we go, and it's still going. So there we go. Theo, please help us with the Stuart signal to trade today. My account is about to go up in smoke. Bro, you know, your accounts get blown. You need to know why it's happened. Is it you're risking too much? I can't tell you what to do. I'm not allowed to. But you know, you should have a system. You should have a strategy. There are hundreds of strategies out there, and they all work quite well. Most strategies you will find or come across work quite effectively. The problem is your risk management and your application of the strategy. That's what most people get wrong, I'm afraid. Or, you know, most people want to buy signals. You know, you don't learn, as I said to Chad earlier, you don't learn a lot from buying signals or even free signals. Think about why would somebody give something away for free? You know, they must be earning his money somewhere else or something. You know, the market, you know, the world isn't like that, is it? So have a think about that. But as far as blowing your account or, you know, it happens. It's just the nature you know, of trading. That's one of the big risks of trading. You know, it is a volatile market. You've got to be very careful. Trading Forex and CFDs, as we say all the time in our disclaimers and risk warning, it is a risky business. So be prepared for that risk. So just manage your risk. Always, when you lose, make sure the losing trade is very small. That's the key thing, you know. Raniel's asking a similar sort of thing here, but I blew my account. I have no money now. Can you start trading again? Raniel, I can't help you with that, I'm afraid. Can you hear that? That's some neighbour of mine trying to pick somebody up. Arekma, Kiwi is very strong, my friend. Kiwi is very strong. It's, you know, it's going up. Oh, go away, noisy neighbours. 74, big line in the sand. This is the 1 hour chart. It'll get a bit messy when I take it to the daily time frame, but look at the recovery the Kiwis had, or the continuing trend. This is October here, this month here, and this is November, December, January a bit flatter, and February big strong close the end of February. So Kiwis continue to accrue continually. I know that sounds a bit of a cliche, but you know, the trend is very much to the upside. The green line here is the 20-day moving average, and it's, you know, it's been over it, you know, continually. Bit of a dip here in the middle of January when we weren't sure what was going on, but you know, consolidating. And again, like I just said, the longer a market consolidates, the longer a market goes sideways, the move out of that consolidation can be quite strong, and that's what we've seen here in this second half of February for the Kiwi. Big explosive break here in the last week or so. From this consolidation area around 72. 72 is a big psychological area for the Kiwi to get to, and it's broken out. You can't see because of my ugly mug. If I just make that bigger, should get, there we go. You can see here how big the, hopefully you can still hear me, guys. You can still see how strong suddenly the tick up here in the price action this week and last week in the Kiwi. Big tick up here in the MACD histogram. Big turn up, I should say, in the signal line, and the oscillator here at the bottom. This is the MFI oscillator, the money flow index. I don't often have that on a chart, but it's on this chart for some reason. Actually, into its overbought zone here. It's actually, I don't know if you can see that. It's a purple line on a black. It's not great, but it's actually into an overbought area. But you know, the trend is again, like we've just seen, very strong, very, very strong move. Maybe some profit taken up here as we broke over 74. But my point was, let me just take this up to the other chart. So we've got the weekly chart. It's complete. This is the weekly chart, off the chart. We've got the monthly chart, and here we are, this 3-year high. So this is February 2021 where we are. We go all the way over here, all the way back to February, January, February 2018. So 3-year high for the Kiwi. And this big strong rally. Remember March last year, this time last year, we were on a way down as the pandemic was striking. We were down here under 63. We went all the way down to under 55. And here we are all the way up at 74. Huge, huge, huge move to the upside for the Kiwi. And it's just continued to trend higher to the upside. And that's still the case, Kiwi traders. So big move, and it's big strong day yesterday. Breaking 74, so that's our key support now going forward. 7.74 for the Kiwi. Chad says correct. Okay. Chad, my friend, coming on. But have a look at Arch. Arch has a nice little package, okay, and it's that patent recognition package. And you key in the time frame you want it to trade. Key the assets you want to trade. Maybe it's not just for Forex, but it started with Forex, so it'll scan other assets as well. Hello, what's up with gold? Gold is moving down, Jonathan. We said earlier. Gold here, 15-minute continuing to unwind. And as I said earlier, hope you were here, that key for me, the trend is down here on the daily time frame. The key level is this S2 today, or the S2 that's on the market on the chart today at 1770, and then it's a low for the month. Remember, we've only got 2 days left of the month. It's Thursday. Tomorrow's the last trading day of February. Lots of account balancing up for the end of the month. Lots of news going on as well. We're still in the middle of, well, not in the middle, we're well past the middle of the earnings season, but still lots of companies, some significant companies still reporting. Today we've got Moderna, Dell, Anheuser-Busch, the guys that make Budweiser, Airbnb, Salesforce. Lots of companies already reported. About 400 companies I was tallying up earlier across Europe, Asia, and the United States. So obviously most of the United States ones, a lot of the United States ones are coming after the market closes tonight, 11 o'clock server time. Anyway, Mkumzu saying good afternoon. So yeah, gold, to finish your question, Jonathan, there, to the downside basically on the daily. The 4 hour is also weak, big strong candle, down candle at the moment. It's not complete, so you can't think. You look back, previous candle was weak, previous candle that was even weaker, doji candle before that. So yeah, moving down, can't hold 1800, moving to the downside. The 1 hour time frame also being weak from yesterday afternoon, tried to move up again, couldn't hold that 1800, couldn't hold the 200 hour moving average, and then signal lower this morning, 2 o'clock this morning, and it's just continued to unwind since then. Okay, Chad, very saying, but that's not a problem, Chad, my friend. Have a think about it. Remember, guys, it's your money. When you're trading, it's your money. You've got to respect it. Okay, the market goes up, it goes down, it goes sideways. It can be very volatile. It can move very, very quickly. It can move completely irrationally as well. Don't try and apply normal engineers type rationality to it. It doesn't do that. It does what it does. So just be aware of that as well. And it's not for everybody. So understand what's going on. Good thing about signal service, Chad, I know I've been slagging them off, but it perhaps gives you a bit of confidence seeing what other people how other people create their signals or create their ideas. But the one thing I really like about, and my picture's not on, is it? The one thing I really like about auto charts is there's lots of different patterns and recognitions, and you see the ones that are more successful on the asset that you're trading, and there's all that data's in there. It tells you how successful they are about getting the target levels. They talk about the rising wedge, the falling wedge, the head and shoulders, inverse head and shoulders, whatever it is, whatever pattern it is they're using, it's all in there. You can drill down into it. The data's there. It's not hidden or anything. So it can be quite a confidence booster for lots of people, which I guess a lot of people use it. But best of luck, whatever you decide to do, Chad, my friend. Dutch Basand, hello, my friend. I hope you're not watching the cricket. Terrible. What 2 days cricket? Last time I saw it, England were collapsing again. Root had just got himself out. He got 5 wickets, but he just got himself out. I don't know if you're a cricket man, Dutch Basand, but terrible. Huge, massive stadium. I love that stadium, but oh my word, the cricket. Axar Patel is just tearing the English batting apart. Swiss franc is what you asked about. Swiss franc. What's going on? Well, as I said earlier, the Swiss and the yen are relatively weak compared to the dollar. So the Swissy here has rallied from these lows earlier in the week, around 89.50 down here. We went into the 200 hour, and it's moved up, dipped down, went down, and now it's moving back up. It's sort of consolidating here. So it's held over 90.40, which is where S1 is here. The big 90 level is right through here at S2. So it's over 90 itself. And we couldn't get to 91 yesterday, and then we've moved down. It's not a great deal of action, but that, using this crossing strategy, it's not brilliant, would have sort of ticked higher in the last hour, although it's a very weak small candle. Look at those 2 candles there earlier today, this morning. Much bigger, and we've ticked up in the last 4 hours, but it's weak. We've just about moved up, but it's really consolidating. It's not trending at all. And this is where moving averages get caught out when we're chopping around a level. So the moving averages are flat, the Bollinger Band's flat. There's no direction, so we're supported by the pivot point. We've got resistance before 91 at 90.95. So there's not a great deal of action going on there on the Swiss franc in the intraday game. a terrible match. I don't know, is it a terrible match? It's a terrible wicket, I'll give you that. But yeah, it's not Test cricket, is it? It's just awful. But Johnny Bairstow getting out earlier. Oh dear, what a player. Those of you that aren't interested in cricket, I'm not going to apologise because it's the greatest game in the world. But I know it's a lot of people call it boring, but it's certainly not boring out in India at the moment for the English cricket fans and team. I don't know. I don't know what time. Well, I haven't finished today. Let me know. I haven't got anything else up here. Anyway, yeah. So for you, my friend, Swissy, Swissy, yeah, not doing much in the 1 hour. The 4 hour remains bid. It's over its 20-period moving average there. That's at that 93.40. But again, you see how it's flattened out. The daily, not great, but yeah, 89 is the support in the day. Look at that, 1, 2, 3, 4, 5 days. That would have taken you long here. So the daily's been long from the 17th and pushing high, but running out of steam today by looks of things. So 91 looks like possibly a tad too far for the dollar against the Swiss franc, my friend. Yeah, terrible pitch, absolutely. Awful pitch. Awful pitch. It's only day 2 as well. Massive new, beautiful stadium, 112,000 people in there. It looks fantastic. Indian supporters going mental, understandably, making a load of noise. But yeah, terrible pitch. Gold, Jonathan, we talked about gold, didn't we, my friend? It's weak. I did talk about gold. Yeah, it's weak and it's continuing to weaken. 1770 is the key level on the higher time frames. That's where S2 sits today here, 1770. This is the 1 hour time frame. You see it's been tracking lower. So the trend is lower on the 1 hour. The trend is a bit choppy, but lower on the 4 hour. Can't decide for this candle because it's still not complete. But it's been, biased lower for today. The 30-minute, again, another one that's trending lower, moving lower. Jonathan, it's all about your time frame, my friend. And it's moving lower. Yeah, data percent, it's terrible, isn't it? Finishing in 2 days, it's unbelievable, crazy. But anyway, can we get your WhatsApp number, sir? No, I don't think so. It's my own personal telephone number. Yeah, somebody found it the other day. But why do you want my WhatsApp? Come onto our website. I'm not hiding anything. We don't need private groups or anything. This is all common knowledge. I'm not allowed to tell you what to do anyway, and I wouldn't anyway. Don't do things. You don't need to hide away on a WhatsApp group or a private signaling group or anything. Make the most of what you've got. There's lots of free advice out there, and certainly make the most of it. I'm going to leave that Sans comment on there. Terrible match. Anyway, people know what we're on about. Raj says, "Oh my God, I don't know what you're talking about, Raj. Oh my God, what? Please help us with a sure signal." So as I said about signals, there isn't such a thing as a pure signal. This business, chaps, ladies, everyone out there, is a risk management business. You've got to understand yourself first and foremost. I know I say this time and time again, but it's true. The markets don't change. The markets go up, the markets go down, the markets go sideways. There's a lot more computers and algorithms involved in trading now than when I started looking at markets a long time ago. But it is what it is, and that's what they do. Someone's asking about Facebook. Yeah, Facebook's been very volatile, but remains relatively well bid. Where's my Facebook comment gone? Bitcoin, sorry. Phil was asking about Bitcoin. Let's have a look at Bitcoin. What's happened with Bitcoin? It was moving down earlier. It started to move up. Chopping, yeah, it's sort of calmed down a wee bit. We went under 45,000. We shook out. Remember the comments from Treasury Secretary Yellen. The comments from Bill Gates probably didn't help. Buying opportunity for many, I would have thought. Remember, we went from 57,000 all the way up here, all the way down to 45,000. That's a 20% shakeout. Technically a bear market for an hour or two as we went under 45,000, but we've moved back quite aggressively and quickly to 50,000. That's the big yellow line here. And the last 4 hours, we've moved up over 51,000, and we trade at 51,044. So again, that's been choppy, Support is 50,000, and below that is the pivot point today at 49,000. These are huge ranges, aren't they, on Bitcoin? But again, for today, it's been relatively positive because it bounced off the pivot point, broke through 50. If you were trading this with this strategy, it would have went long this morning there, or this afternoon, 2 o'clock this afternoon, as it's gone back over the moving average. But it's been dangerous, hasn't it? Because we went long there, it didn't go up. It looked like it was going to, actually it didn't go short. It went short there, and then it immediately turned around. So you were stopped out flat on that one. Then we've gone long. You're in the money on the long trade so far, but it hasn't moved up very far, has it? 52,000 so far. It's dipped, but it's certainly moving up, Faye, today, Bitcoin. But if we go to the higher time frame, that's the 1 hour time frame. The 4 hour time frame, let's zoom this up, sort of chopping around as we saw after that big shakeout earlier in the week, but now back up and over 50,000. So really the 49,000 pivot point area, the 50,000, big psychological number, obviously 50,000 for Bitcoin. But again, the 4 hour candle, this closed at 4 o'clock 15 minutes ago, and that would have triggered long on Bitcoin, 4 hour candle there. And the daily time frame, you know, shakeout, that's that shakeout over the daily time frame. There's two big down candles from 57 plus to testing under 45,000, 20%, and now we've bounced back quite a bit. Interesting. Let's just have a little look what that does from a Fibonacci point of view, from that low there to where are we? We're sort of we've 65. So you can zoom that up. I can't zoom it up anymore, but we've more than recovered 50% of that, of the initial shakeout. So the 20% fall has been covered with the retrace that we got back today. Can you see that on there? That's that big fall there, and we're back. That purple line there says 50% of that fall over the 2 days of this week has been recovered yesterday and again today, Thursday. So Bitcoin back to the upside. There we go. A personal mentor. Mentors, guys, there's lots of them about. Firstly, there's lots of free stuff like this webinar now. There's lots of helpful traders on Twitter. Get yourself on Twitter. There's some a real good community there. Obviously, people, you know, try to sell you stuff, either a course or an indicator or their time, which is fair enough. But you know, get as much free stuff as you can. But if you've got a good mentor, check out their track record. Make sure it's it's not made up. Make sure it's audited and stuff like that. But certainly, track records are certainly very good. So, Ungwezi, come on to the website and have a look on our education page. Have a look at our videos and our website and our webinars. And get the free stuff first, certainly, before you pay for it. Certainly pay for a mentor. So where are we? Here we go. I was wondering, we've had much spam today so far, but I've just had my first spam message here. Apparently, Sir Eric Donald is very good. Apparently, very good. I'm sure he is. Which currency pairs do you trade the most, and what time frame? The time frame and what you trade, Obafemi, is really down to you. You know, you've got to trade a time frame. I say this all the time. You've got to trade a time frame that meets your personality, meets your psychology, your physiology. Okay, so if you're the sort of guy that's happy to change, be short and then long, short and then long, short and then long, look at scalping. The benefits of scalping is you get a lot of experience very quickly because you're doing lots of trades intraday. You don't have any worry to sleep overnight. You've got no open trades overnight. Scalpers tend to close all their trades at the end of the day. But it can be quite intense because you've got to concentrate whether you're using an automatic EA or you're doing it manually. It can be very, very intense, and you've got to be able to in and out. This little strategy here, this crossing EMA strategy, works fairly well on the shorter time frames. Just follow the same rules, and that's the beauty of technical analysis. Is it does work on or it's as it's as effective on one time frame as it is on others. I mean, there's a moot point. There's a big discussion about what's the best time frame to trade. And I always say there isn't a best time frame to trade. You've got to trade the time frame that fits you and not the market. Okay, don't let the market dictate to you. You dictate to the market about what you want to do. So because the market does what it does. If you're trading intraday, you've obviously got to be aware. You're trading the shorter time frames, the 5 minutes, the 10 minutes, the 2 minutes, whatever it is. You've got to be aware of when news is coming out. Like today, the big news was an hour or so, it was 50 minutes ago at 15:30 server time. Didn't really move the market at all. Although it was relatively bullish for the US economy, it was biased to the upside. But it hasn't really moved the market. I can't tell on this chart here. This, I'll go to something else like the euro. Euro on this 15-minute chart. You can't really tell on there, can you, from the candle? But where the big news in that item was, it was earlier today. When was it? It was actually you can. It was actually went. It was positive for the dollar, so that was the big news item. That's 13.30. So there you go. It's shot me in the foot. So that was the big news item. So again, if you're trading intraday, you've got to be aware of what that's going out. So have the calendar by you and know when that is going to happen. But be prepared to change your mind a lot. In and out, short, long, short, long. Have a system, have a strategy. Whatever time frame you're trading, certainly do that. Surprisingly, yeah, Nasdaq. Here we go. Let's sell. Can we do a Nasdaq? Absolutely, Nasdaq. Interestingly, the Nasdaq was, or the USA 100 was hit quite significantly because there seems to be this churn out of the tech stocks into more cyclical stocks, things like the banks and sectors that may recover quite significantly, that were hit the hardest, could therefore recover the best in the recovery from the COVID pandemic. So, hospitality, hotels, airlines, even cruise lines, all those sort of things have had a fairly strong week or so. The Nasdaq here, let's just go up to the daily. You can see there's still this is the daily time frame for the Nasdaq. So it actually triggered short from a big long move. It went short and is still under its 20-day moving average here earlier this week on the 22nd. Into the 50-day moving average. Big panic spike intraday. Look at that. Let me zoom that up. Big intraday panic spike, but it closed down, but recovered an awful lot of losses here on Tuesday. Positive day yesterday, the first positive day in 8. So we've had 1, 2, 3, 4, 5, 6 consecutive lower closes for the Nasdaq and the S&P 500 here on this future chart. Remember, this is what you can trade with us. This is the CFD of the USA 100, a direct derivative of the Nasdaq itself. So into the 50-day moving average, and that's provided support so far. Interestingly, again today we're at the bottom end of that, and we're testing this key 50-day moving average. So this strategy here, end of day, would have actually taken you short here on Tuesday. So you've been short if you trade this end of day from 13,225. In the money quite a bit first day, out the money yesterday's close, but still in the money today as we're going short again. And is it moving down? But if we zoom this in, you can see it's been in an incredible run up over the last 3 or 4 months. Big run up, obviously, from the shakeout in March last year as well. So first signs of weakness potentially. And that's what all the jitters are about. The markets, things getting overvalued. But so the Nasdaq has moved down more aggressively. If we look at compare that to the USA 500, the more diverse, it's 500 of the wider companies. Still same 6-day down, but we never went under the 20-day moving average, did we? We found support at the 20-day moving average. Same day on Tuesday, big leg down, big wick down into the 50-day moving average, but we haven't broken the key 20-day moving average. So the USA 500 remains relatively bullish from yesterday's big move up, big engulfing candle of the 3 previous days. But the Nasdaq, which led the way up, is it leading the way down? Is the question to be only, as I say, and only time will tell. But certainly that was weak and went weak and short on Tuesday and remains weak. The 50-day moving average is providing support though. Let's sell. I don't know what time frame you trade on, my friend, but that's the time frame. Intraday will be quite, the 4 hour will be, it would have gone shorter before that. Yeah, the 4 hour here went short 17th and ran all the way down. You've got all that long move down there, closed out here, tried to go long into the 200. See how it's tried to move up, got stopped at the 200 period moving average, another leg down. So again, big resistance on the 4 hour for the Nasdaq or the USA 100 around that 13,3020 to 13,350, and then we're down again in the current candle, which closes in half an hour. So 4 hour down as well. Right, some more questions coming in here. That's Sam, thank you, my friend. That's what I just told him before. Exactly. Log on to our website, my friend, and get a lot. There's the videos, there's ebooks you can download. There's a lot of short videos explaining things like spreads and margin and leverage and all the basics that you must understand, Mr. Agu, and come to our webinars and obviously attend these free Facebook and YouTube sessions as well. Okay. Where am I? Facebook. No more Facebook. Facing wonderful information. That's very nice of you. Thank you, my friend. Somebody else saying another broker is better than as well. Never mind. So be it. I'm sure you're right, Adam. Oh, Adam, go away. There's lots of spam coming in here. Can somebody get rid of Mr. Adam? He's spamming us on Facebook, guys. Where am I? Right, 5 more minutes. I'll stay here for another 10 minutes. We'll see how the US live market opens, how that affects it, and then I'll call it a day because I'm running out of steam this afternoon. Let's have a look. Okay, no more questions on YouTube. Talked about the Nasdaq, right? Let's have a look at. Actually, let's leave it on the equity markets here because we're waiting for the open here. So the futures have been up and then down again today for the Nasdaq. The USA 500 didn't break its 20-day moving average, but remains sort of at highs. Again, if we zoom this in, you can see we've gone up, got to these all-time highs last week here, 3,960. We spiked 3,933. But again, you see the 20-day held there under there for 4 days, but it's been a very strong key support area from this first initial break here at the beginning, or the bounce back up from at the beginning of November. So we've been up for November, up for October, up for January, up for February, and still up for the end of February. Remember the other things that happens at the end of the months, guys, is this balancing of accounts. So a bit of sort of shuffling of positions, whether it's the forex market, the commodity traders, or the equity traders. So bit of cooling here, but again, still relatively well bid to the upside. Still expecting lots and lots of stimulus coming out of the new presidency. That adds to the risk-on feeling. We've got equity markets at close to all-time highs. We've got the vaccines rolling out quite positively. Something like 72 million Americans are now being vaccinated, 18 million Brits, and obviously the other vaccines are rolling around the world as well now. So we're still to the upside. Sam, we just talked about Bitcoin. Bitcoin has got, where are you? There you are. Bitcoin remains sort of bid to the upside today. We've got the 1 hour chart. We're sort of got support down here at the pivot point at 49,000. Big psychological. 50,000 is a key level, and we've been over that for most of this afternoon and running up. This pivot, I don't think you can see that. That's a purple Fibonacci level, a 50% level, which is, if I zoom this in, is 50% of the big shakeout we had for earlier this week. So we rallied, didn't we, to 57,000. There was the comments by Janet Yellen and Bill Gates didn't help either, moving down, which shook out 20%, big 20% shakeout, which is normally a bear market suggesting, but it was only under, and we went all the way from 57,000 to 45,000. We've then recovered back over the key 49,000 yesterday, and we've held that most of yesterday, but now we've recovered 50% of that big shakeout, so it's fairly positive. Next resistance, is that the right one? Yes, it is, because it's that one. I've got so many Fibonacci levels on there. Yeah, so yeah, so we're around 50% of that shakeout, so it's really a 10% fall from the high, so it's 10% below our highs, but it's still relatively well bid. So there we go, Sam. Hope that made sense. Unless you're trading intraday, I don't want time frame. You just put the asset on, Sam. You didn't put the time frame, but 1 hour is up. Daily remains sort of bid. It's still above its 20-day moving average. It's there at 45,000, which we went down to test for this shakeout, but as you can see there, it's still up, and the 4 hour was also relatively positive, and it went long here, the 4 hour on the close of the last candle, which was about half an hour ago. So 4 hours looking like it's moving up, although it's not a great positive because we've been going sideways. I mean, its key areas are the 49,000 and the 50,000 on Bitcoin there. Hugo, gold is weak. Again, you obviously weren't in here before, but 1770 is that key area today. This is gold on the 15-minute chart. You can see that continues to trend lower, bit of an up down. MACD's been under the zero line there since all day, since 4 o'clock this morning. It's continued to trial. 30-minute also short, and bouncing off 1800. The 1 hour time frame moved up yesterday, but couldn't hold over the 200-hour moving average. Signal lower was here this morning at about 2 o'clock, 3 o'clock this morning. We retraced a bit at the start of the European session, but we couldn't get over the pivot point, couldn't hold over 1800, and then it's been down ever since here on the 1 hour under S1. And the key level is really this S2 level, which sits at 1770. We got to the higher time frames, the 4 hour time frame, a bit messy, but also short here this morning or yesterday, and then short again today. This one looks quite negative as well. It's not complete yet, and then another hour or so before that completes. But if we go to the daily, we'll see where this S2 level comes from. Got the daily time frame, you can see that's a key 1770s or 1768 as it is on that chart now, which is this low from earlier last week as well. So we went to 17, so S2 is key, and the trend on the daily time, as you can see, the highs are getting lower and the lows are getting lower. So we're sort of trending down. Here you go, my friend. Amira, copper, yeah, copper's at, good afternoon, Amira. Good morning to you. 10-year highs. I don't know if I got copper. I did actually put copper on here this morning, didn't I, on this particular chart. Just get rid of Andrea. So here's my. So just bear with me a second. I need to get rid of that. Some would argue it's overextended, but copper's had a double whammy. Copper's a big component. China is a massive consumer of copper. Chile is the world's biggest copper producer, and copper is in all sorts of things. But the big, the initial rally on commodities is obviously started with Biden coming in, but it's the amount of copper that's required for a lot of the green technology that has really given copper a lift in the last a few weeks as well. So we're at a 10-year high here. Just bear with me a second. It was on here this morning, or did I close it? There it is, copper monthly. This is what I was wanting to show. This is copper on the monthly time frame. Obviously, it's a bit tight, isn't it? But here we are. Massive candle this month. This is again. This is zoom this up a bit. This is the how you can actually candles, but you can see what a rally it's been in anyway. Even before we had President Biden at the end of the year. But that's the rally in November, December, January, and February has been absolutely massive. So this is the monthly time frame, and look at that. It's been positive for most of 2020. And certainly all of the first 2 months of 2021, but a massive 10-year high here, 4.332. If we look across to the left, takes us all the way back off this chart here. This takes us back to the beginning of, I'll have to zoom this up a bit and it goes a bit messy. There we are. Takes us back to 2011, so a 10-year high for the copper market, and it's strong. Do you buy up here? Well, the trend is up. If I look at a different, let's put a different template on this chart. The demand is, that's what we're doing. Template, that's what we're going to do. There's some more standard chart here. This is the monthly again. That's it's with a moving average. So again, if we go down the time frames, the weekly's being, you know, massive move. It went over. If you would trade end of week, there was the end of May, and you know, it's had a strong, as I said, strong 2020 over the. And as far as the daily is concerned, it's just gone ballistic in February. So again, another one that was consolidating a bit through in January on a daily basis, but a big break here. First signal was this here on the 5th of February, a bit inconsequential then because it hadn't broken out of this this channel, this horizontal channel we were in. See the, you know, the top for January was still way above the initial break, but it followed through quite nicely, and then the follow through buying would have started here as we've broken out of that channel. See how that channel's gone sideways, and the big, you know, the initial buy, or the second phase of the buying started down on the 10th of February, and then we've followed through, and it's just got, the last week or so, it's just got really aggressive with the expectation of the reinflation trade coming through, big expansion of investment in green technologies in the United States, growing recovery in China, big consumer of copper, so copper's rallied very aggressively, and all commodities are up quite significantly. Lumber's another one that's moved very aggressively. So bid. Do you buy at these levels? Well, it's a bit, you know, it is overextended, one would argue. RSI at 87, it can obviously keep going. MACD still looks relatively positive. Stochastics here, remember this is a daily time frame, it's been overbought, it'd argue all of February, but it's still high, it's going up. You know, the trend is strong, a bit extended. Look at the moving, look how the Bollinger Band has widened, the old bird's beak. We've been at the top of the Bollinger Band from the initial break, and then last week it's been very strong. So don't try catching the top, Amir, if that's what you're asking about, but the trend is certainly to the upside, and a 10-year high, you know, can become 10.5-year high, an 11-year high. Who's to say? We'll zoom in a bit. There we go. So what's the market telling us? Well, last time we were up here back in 2011, you know, we got as high, the all-time high there at the beginning of, is that back at right, the intraday in February 2011 took us to 4.6550, 4.650, I should say, sorry, which is still obviously quite considerably above where we were, but the month closed out around there, and also March started there, so around 4.4720. So it's still, let's put that in for the sake of it, and also that all-time new high there at 10-year at 4.6. So if we come down to our weekly, zoom in, you know, it's still got some, you know, still a bit of distance in there on the weekly time frame to 4.47. That's the next area, but as you can see here, it's, you know, it's just over today's R2, so it's, you know, there's still some, perhaps some legs in there, you would argue. Okay, Amira, I hope that's answered your question. If not, please ask again. Let me just go back to Facebook, see if there's any more questions on there. There's nothing new. I'm just getting spammed here. Faye saying Euro Kiwi, I don't understand on the daily time frame. It's bullish, but trading is now on the bears. Faye, I don't know what you mean. Kiwi, let's just go back to the Kiwi. you know, if the daily is, when I'm saying it's bullish on the daily, well, that's because, you know, the day isn't over, and end of day traders only look at it once a day. So they'll make their decisions end of day. The intraday traders are making their decisions as the market is changing on a daily basis. So it might have run out of steam on a daily basis. I can't find my Kiwi chart now. Oh, there it is. So yeah, that's very bullish daily. You're correct. The 4 hour is still quite bullish. It's rolling over a wee bit. I don't know what time frame you're talking about. The hour is ran out of, looks like it's running out of steam. And as I say, it's triggered short. It's very much against the trend in that last hour. So here at 4 o'clock, it went short. It's bounced back again. I guess that's what you're talking about. 30-minute, yeah, again, another one that's sort of running out of steam. And the 15-minute, you know, that would have triggered short here earlier. MACD to the information to the downside. Yeah, MACD is triggered under the 0 line now in the 15-minute. Yeah, definitely. Right, finally, final question. Sam, what's the difference between I trade currency and crypto like Bitcoin or gold? Sam, there isn't any difference. If you've got there's obviously different potential moves in the actual assets, and that's what this indicate here. The ATR tells you. So here, for instance, on the this Kiwi chart here, this tells you, this ATR here, this tells you this typically moves about 15 points, 15 pips on the 1 hour time frame. If we go up to the daily time frame, the ATR for Kiwi against the dollar is 61 pips. So depending on the asset that you're trading, but the technical indicators when you're talking about are all the same. They're based on what the price action is doing on the indicators. So there we go. So let me just have a quick look at how the markets have opened. It's a weakish open to like first 10 minutes of trading. We're down about 14 pips on the or 14 points on the S&P 500, 44 pip move. Sorry, 44 point move up yesterday. So retracing some of that move to the upside. So that's all for now. Hope that was of use to you all. See you all again on Monday, and obviously next week is a new month. We got NFP on Friday, so we'll be live for that as well. In the meantime, stay safe and trade carefully. And as I say, may the trend be with you, my friends. All the very best. Take care. Bye-bye.